In this video, we want to take a look at the ERC credit through the eyes of the employer. And really the reason for this is because if I've got here on the overhead, IRS recently is putting out these notices, and I'm an employer. I have a couple different companies that I have employees, so this concerns me too. But let's read these warnings that are coming out, because if you've got an ERC credit, you want to know whether it is a real credit or whether through what, and let's read the concern. Employers, beware of third party promoting improper employee retention credit claims. Another one, this is actually on March 7th of 23. This is last week. IRS issues renewed warning of employee retention credit claims, false claims. Again, false claims generated compliance risk for people and business claiming the credit improperly. And I think in this IRS notice here, the real important part is two parts: false claims and compliance risk of you and I as employers. So these, I mean, let's stop and think about it. Where all do you see this advertisement for ERC? You know, you go on the internet, there is just list and list of them. I was watching TV last night, and during one hour show, I saw 3 ERC advertisements, and it was 10, 11 o'clock at night. Wow. Yesterday, I'm taking my granddaughter to track practice, and we got the local radio on, and I hear 2 different ones between my house and the track area. And it's, again, get the ERC, and they tell you, well, you can get it in 6 minutes, 4 minutes, whatever it is, and there's this magical number, $26,000. What I want to do here, and kind of keep it short, I've got a couple other videos that we have out there, more in length, and if you watch the bottom of the screen throughout this presentation, you'll be seeing some references to those other videos. But for this video, I want to help you, the employer, kind of come up with a checklist of items, kind of warning items. You know, if they start out with advertising, for example, get 26,000 in 6 minutes, your radar should come up. That doesn't mean you don't continue. And this program is not to tell you which company to go with. And then the other thing I would say is, if you've already got your ERC, I'm glad you're here watching this video, because here's why. It's the fact, again, generate compliance risk for people and business claiming improperly. The statute of limitations on this ERC credit is 5 years, whereas normal income tax is 3 years. Mm-hmm. So you could literally, in this cycle, get 3, 4, 5 years down the road, and all of a sudden the IRS shows up. And they're probably going to show up in the mail. They're probably not going to come out and knock at your door. But the important thing is, the size of these refunds, if all of a sudden you had to repay them, that bankrupts a company. That takes away the purpose of the ERC credit. The ERC credit, as we know, and again, at the bottom of the video, there'll be a reference there to understand the ins and outs of the ERC, because we're trying to do an overview checklist. But it's the fact that you, as the small business employer, are liable. And if this is fraudulent, it could be, and I shouldn't say that word. I want to say improper claim. I want to say a scheme. Yeah, IRS calls it a scheme. They call it third-party promoters. As an employer, you don't understand all these complex rules. So you're relying on a third party. And if that third party is a promoter, or that third party is a scheme, that doesn't take away your responsibility and your liability, because this is an employer credit. And also realize an employer tax credit is a much higher level of exposure to the IRS, because you're getting money based on reimbursement of employee wages. And as a result, then you're going to have penalties and interest. And if you participated in the promotion or the promoter innocently, you know, innocence doesn't protect you. Laura, I know I'm kind of rattling on. I'm kind of excited about this. Actually, it's not excitement, it's concern. Mm-hmm. I'm like, I've had to talk some of my own clients down, and that's kind of where I come up with this presentation. And that's where that, you know, yesterday I had appointments in the office, later today I got appointments. So it's really, how do you tackle this? We're going to start with, what's the employer checklist? And through this, mainly I'll be focused on items to look for that is a warning sign that it could be a promoter. It's a warning sign. It could be improper claim. It's a warning sign. And as we go down through here, just one sign, I'm not saying, okay, I can't. But if I can give you a series of checklists or a series of items on a checklist, then even a layperson, an innocent person, may be able to ask the right questions or say, what did they give me? So first thing on your checklist, the IRS is telling you and I there is a huge amount, a large number of promoters out there, a large number of companies getting false claim. The other thing, I see a lot of ads. I got one over here, and I've seen several of them and do my background for this. Beware, your preparer, your CPA does not understand ERC. They may have told you no. Well, actually, you don't know that because you don't have the knowledge of the ERC. So an indicator, if they're telling me your preparer does not know, that's your trusted pro. So please, please listen to your tax preparer, even though they're only doing income tax and they didn't do your payroll or they didn't do this ERC. I've got other videos out there I'm putting out a program just like this for the preparer who does not do payroll taxes, for the preparer that does not do ERC, and I'm going to give them a list of indicators of beware. And I think, again, we get done with this list, I think that it's really going to help the tax system and small business employers at least question and ask the right questions. So let's start with this.
And a good tax preparer, if they don't do ERC themselves, they should have a reputable source that they could refer you to,
Yes.
that you could ask them for a place to go instead of...
Right. It's a great point, because yesterday I got 2 requests of people that attend my presentations that I do live around the country. And in both cases, they said, here is a question. And here's the thing, when they started asking those questions, I already knew what road they were going down. So I said, do you have this, this, this? Yep, that's what it is. Yep. Okay. My advice is to tell your client, beware, but you may have a false claim here. And then if they want somebody to look at it that's experienced in it, take a look. But it's an excellent, excellent point. So first thing on our checklist, IRS has warned us of promoters and schemes out there and a large number of them. Another one, advertising. Beware, it doesn't mean it's not legit, I'm not saying that, but beware when somebody says, I've got a stack of papers, beware. In 2 minutes, you can pre-qualify. In 4 minutes, in 6 minutes, and they all say the same magical number, 26,000. Why 26,000? Because that's the max credit you can get for 6 quarters. Oh, wait a minute, for 6 quarters? Let's take a real step back. How do you qualify for 6 quarters in 30 seconds or less? 1, gross receipts test. Of all these promoters or schemes that I believe I've participated online, I've actually went out and found out I can get so much money. I've actually talked to live people after submitting stuff and been told I qualify for the credit. And I can tell you, none of my companies qualify for the credit because whenever the first quarter, I got PPP. You couldn't get payroll, the payroll protection for the same wages that you got the ERC. And where my business is here in central Missouri is the fact we only had 1 period of a government mandatory shutdown. And one of my companies was not critical and the other one was. But during that period, I got PPP. So number 1 is, if you got PPP, you can't get 6 full quarters. You may get part of it. So what we have to watch is if they're advertising, it takes only this many minutes. If they're advertising 26,000, it's a warning sign, a curve coming up. That's a good one. It's like a curve. There's a curve coming up.
Well, and because you addressed that these advertisements are everywhere. They're online, they're on the TV, they're on the radio, but also, I mean, when you go through your mail, how many advertisements are you getting in your mail a day?
How did you know I had an example? I'm serious. Look at this. I got this last week. This came to the CPA firm, AGC, CPA. It looks very official. 2021 estimated tax refund information enclosed. Wow, that looks, and it's during tax season. To me, I first look at it and go, oh, no, this can't be the IRS. I open it up, And look here, a toll-free number, 202. Well, I go to DC. Guess what? 202 is a Washington, DC number. This is in the mail. I didn't solicit this. Indicators. First thing, it looks like this. That looks pretty official. I'm getting my 1099s, my W-2s in an envelope just like this, and it says estimated tax refund information enclosed.
As a business owner, that looks official if you're opening up the mail.
Yeah, so I would open this up if I wouldn't have taxed. Well, I did. So, well, that was. I cannot believe this is going on. I cannot believe Treasury and the IRS, and even maybe Congress, is not doing something about this, because in the end, it's going to destroy a lot of small businesses. So it says tax refund notice. Well, when I see the word notice, I think IRS. Now it's got City Raleigh. Case number. Wow. I got a notice with a case number on it and a toll-free number out of DC. That 202 again is a DC number. So at this point in time, I'm like, wow, I've got all the indicators of some kind of official government document. Please keep a copy, look at this, please keep a copy of this notice for your business records. It's an advertisement. But in my brain, I'm going, oh, wow. So you see all these little bitty steps that just keep building up my curiosity. And then here it is, March 2nd, I qualify somewhere between 90,000 and 13 million. So you may qualify for up to 26,000 per employee. Numerous ways to qualify even if you took PPP money. And no limit cap on funding. It's not a loan. So anyway, we can go through this, and I like the disclaimer. It's fine print back here, and it tells this is a subsidiary of something. But my point is, to your example, you even get it in the mail. You get it on the radio. So I understand why people are like, why not me? I had somebody yesterday. Why didn't I get ERC? Well, real quick, the person's gross receipts did not go down. They were essential. And during the mandate, the business they're in, they had to continue. So their receipts went up. No employee was dismissed. It was a mandate, but they were priority. So they didn't qualify for any period because of their particulars. So the next thing is that what I found out, and I'm going to try to, here's another one. This is one of the ones that they told me I qualified for. See this right here? Because it'll show the company. It says right here, based on the maximum eligibility. Now this letter is addressed to Larry. Here's one of the ones that I went through. I responded, I filled out my email and my stuff, put in number of employees, and then I get a call back from this gentleman, and I get an email. And based on maximum eligibility, you could receive as high as $182,000 for the ERC. They just took the number of employees and multiplied it times 26. Wow. So then in it says, please provide all, and all's in bold, all the following documents. So here's the next one on our checklist. What documentation is being requested to qualify me? Okay. All right, so I'm going to go over. The first one is gross sales documents. So there's one of two ways. Gross receipts dropped. And again, you can go to another video on what those thresholds are. We're not here to explain that. So gross receipts went down and you kept your employees. Or the one that all of these appear to be these promoters, they're using the second one, and that is the fact that you had some kind of COVID impact. They call it a COVID impact statement. So everyone I've looked at that other tax professionals have sent to me to review, everyone I went online to look at, they have this COVID impact statement. And just real quick, here's another indicator. What documents are they asking for? Well, they're asking for my quarterly payroll taxes for 2019, 20, and 21. They're asking for employee information. Here's where it goes to that second threshold, or that second way to qualify, not gross receipts, but a mandatory government shutdown. So here is COVID impact statement. This is just one of them. How was your business impacted by COVID? Please check all that apply. And I see this list very common. How was your business impacted by COVID? Please check all that apply. Now I'm going to read part of these. I'm not going to read them all. I've seen them, generally they have 12 to 15 ways to qualify. So I'm actually filling this out, but the person that I'm talking to, I have a person assisting me online, so I'm doing it right according to the question. So here's a document, and here's your first major indicator that there's a problem. All right, I'm just going to read them. Full shutdown, partial shutdown, supply chain vendor interruption, interrupted business operation, changing way of business operated, offer products or services to the customer, reduction in service or goods, had to reduce your hours of operation, finding employees and keeping has been difficult. What's the snigger? That's everybody. Okay, so, and I'm going to stop there. So I'm going to kind of go in reverse order. Now, if you heard those questions, Laura, how many of those, and you started sniggering, it's like, check mark, check mark, check mark. The gentleman on this told me if I checked one of these, I probably qualify. Wow. So here's the problem with this. Number one is, they didn't ask me what period. If it's so we're not talking about the gross receipts test, we're talking about the second one, a mandatory government shutdown. When I look here, what does it not ask me about? What time period, and was it a government shutdown? So finding employees and keeping them became difficult. That may not have a thing to do with COVID-19.
Yeah.
So how many people innocently, this is where the improper claim starts. How many people, small businesses today, could not check that box yes? I could.
I can't, yeah.
Every employer I know, they cannot find employees. So check the box. Now, it said finding employees or keeping them became difficult during a mandate government shutdown. Supply chain vendor interruption. I've done a separate video on supply chain, and there it was the supply chain or vendor interruption during a mandate government shutdown. Mandatory shutdown, okay?
Everything on this checklist has to be from the government shutdown. It can't just be because, you know.
Excellent point. That is the takeaway point. So on your checklist, if they asked you business impact on your checklist, did they ask me related to a government shutdown? Because see, the government shutdown has two rules. It has to be a government shutdown, and the impact has to be at least nominal to receipts, which means, don't take this as authority, but this is my business explanation to my client, is that nominal impact is at least 10% of gross receipts. So if I can't get some supply item, it still has to be at least more than nominal to my, it has to be at least more than nominal to my business. Well, more than nominal to my business, did that item, did my gross receipts go back down by 10%? Was it because of this supply chain? Oh, but the supply chain, if you wasn't in a government shutdown, some of these promoters will say, but it was because your vendor was shut down. Well, in my video, when the IRS shows up, you're going to have to, there's a specific list that you're going to have to prove that vendor, you couldn't find it elsewhere. It was, so you couldn't, did you search to see if you could find that product elsewhere? Was that during your part you were waiting on, was it interrupted during the government shutdown? And it had to be more than a nominal impact.
Because using the terminology impact, I can't think of anybody that's not been impacted by COVID-19.
Right.
Everybody's been impacted, but not everybody has experienced a government shutdown for a specific time period.
Well, and see, that's like where we live here. We've had one government shutdown, and since approximately June 1st of 2020, this area of the country has not had another shutdown. Now, if I live in Chicago or LA, different set of rules. They were shut down a lot.
Yeah.
So the point of it is that all they knew, I was from Raw, Missouri. And through this whole ordeal, and I actually got qualified through this whole ordeal, they never one time explained to me government shutdown. They never one time said it had to be related to government shutdown. You know all they did?
Were you impacted?
Were you impacted? Because I checked a couple of these, and they also told me I checked a couple, and they go, well, normally most people check 5 or 6 of these. So so whenever the IRS, for example, goes to audit, they're going to be asking for that. So we got that. Then whenever you sent your stuff off, what documents did you get back? And did you review those documents? Because again, which rule did I qualify under? So when you look, you get this ERC, they say you qualify, and here's what are we going to do? We're going to amend our 941. So when you amend that, as I mentioned earlier, the IRS knows because it's on there. So what happens is that you're now attesting that you qualify under one or two rules. Well, if your person doing your ERC, a real simple question, what did I qualify under? Did I qualify under the significant decline receipt? Or did I qualify under the government shutdown and a nominal, more than nominal impact? That's the only two rules to qualify. And well, it was the supplier. Well, did they ask you which supplier? What was their mandate, government shutdown? So when you say it's a supply problem, you move out there. So a couple of things. So again, one of the big checklist takeaway. Did I ask what I qualified under? Did I qualify under gross receipts or a government shutdown? And here's another one. If they qualified you for all 6 periods, it's more likely than not that that's an indicator of improper claims. Because if you got PPP, that's a real indicator of improper claims. And if you qualified for all 6 periods and you didn't have a government shutdown for all 6 periods for 2020 and 2021, that's probably a false claim. So I don't have to know all the rules. And that's what this video is about. I'm an employer. I'm trying to think through you as an employer. So just ask, how did I qualify? And in some of the companies, I'm going to do a separate video on engagement letters. And I'm literally going to go through a couple of engagement letters that I have received addressed to me as a small business. Okay, so they put Larry on it. You put Larry on it, I have a right to read it. And in one of them, it literally says the client's responsibility, you have determined that you are eligible. That one right there is stop. So read the engagement letter before you sign it. See, I'm giving you all these indicators. And that one, I knew immediately, I'm the one that determined as a small business. See, I didn't tell them I was a CPA. I'm guilty. I told the truth, but they didn't ask the right question. What goes around comes around. Sorry. But my point is when I looked at the engagement letter, when it said the client is responsible for determining that I'm eligible, I'm signing off that I've already determined it. And then when they get these fees, whether they're 15, 20, 25%, and if they are a tax professional, under Circular 230, don't worry about that term, but their professional responsibility is they cannot charge a fee that's exorbitant related to the work they're doing. And also it should be a question. Well, if in that contract, in that particular application, if I'm signing off that I'm telling the ERC promoter that I qualify, then all they're doing is doing a spreadsheet calculation and putting it on these amended 941 returns. And whenever the IRS shows up, they're going to say, well, if they're even around then, because also I find some of these companies are layering, which means this is the company that does the promotion, this is the company that does the work, and this is the professional group backing it, also either a subsidiary or related company. But again, I'm giving you, read the engagement letter, people. I read that one. I came to not a warning, it was stop. I don't know what this credit is, and I'm the one qualifying for it. So before we go on, let's just kind of recap indicators of improper claim. I think that's a good title. Indicators of improper claim, whether or not I have filed for the credit or somebody's filed on my behalf, or I've already got the check back. Because if there's a problem as a small business with my check, I want to stop the problem now. So what I would look at is look at the average, and help me out here. Look at the advertising. If they're advertising in 4, 5, 6 minutes, you always get 26,000. You can qualify, that you qualify for all 6 quarters. That's just...
If it's too good to be true.
It is. And if they qualify for all 6 quarters, and your gross receipts, your gross receipts have to go down. That's the first one. And there's a 50% test and a 20% test. And see, you really don't have to be an expert in ERC as a tax professional to do that calculation. But that's not the focus. The focus is because of a government shutdown and there was more than nominal impact from what that was, which means greater than 10%. So we've got advertising, we've got documents requested. These documents on one of them, I can do another one, but it's going to be the same thing. Check all that apply. Generally, there's 12 to 14, 15 of them. But if they don't say during a government shutdown that it was more than nominal, because I had to eliminate a shift and it wasn't in a mandated shutdown, then I don't qualify. I can't take normal business items. Employees won't show up. So what? Masking. Everybody had to mask, whether at work or not. That wouldn't qualify. So, the supply chain's a big one. Remember, there's additional documentation for that. I did a different video on that. It'll be at the bottom of the screen. So anything else you got on your list?
What they ask.
What they ask. Oh my God, yeah, that's real important. What they ask. So what they ask, if they don't explain the two rules, then that's an indicator, And so if you're interviewing them or you want to call whoever qualified, you call them back. You know what you say? What did I qualify under? And also, I was guilty. I did have one person to hang up on me. I was talking and I said, oh, by the way, I do need to disclose you are being recorded. Indicator of improper claim. Another one, I went out and checked websites. One of them, I found a website that was set up in July of 2022. I found one website that was set up in November of 2022, and they're experts, So from that point, I found one advertisement. Sorry, it was a major law firm, and they said, well, your tax CPA doesn't always know the rules. They look at the gross receipts test, but they don't look at the nominal test. Well, actually, what the nominal test is a government shutdown, and there was more than a nominal impact. So to me, it should have said because of a government shutdown and more than a nominal impact of greater than 10% of your income, your gross receipts. So we got that one. So look at their website, check Better Business Bureau, see how long they've been in business. Just good business questions. So with that, engagement letter. Read the engagement letter. That was another one.
I didn't write it down, but you did talk about it.
Well, just because when we get done with this, I want to take it back to my office and use it. But the engagement letter, again, I'm going to do a separate video on engagement letter. But when I started reading through it, what I found out, they were more worried about the fees. One of them, I had 24 hours. The other one, I had 48 hours from the time the IRS corresponded with me about me qualifying for the credit. And then both of them went to because they need to know for their fees. See, when I get to looking at these, all they're doing is doing a spreadsheet calculation. And my concern is they're not taking the time to truly qualify you. That's why this is a scheme or a system. Once you get the credit back, then you have to file an income tax return. And that's where I'm seeing people are coming in saying, I got this credit because they said they qualified, they were experts in it. It's like, this hadn't happened very often because we went through all of our clients, but I've had a couple come in, and I had one person that if she does what she says, she's sending it back because all I did was walk her through the questions. And she goes, they didn't ask this, they didn't ask that. But who's, again, ultimately liable? I am as the small business. I've got to amend my income tax return so I get a credit of $100,000. I've got to go back in the period that the credit was for, not when I got the check, and I have to amend my income tax return for 20 and 21. Well, the statute on that is not 5 years. And also their fee, like I should be, if it's a good ERC claim, then the fees related I should be able to deduct. But if it gets audited and they said this was improper or part of a group of schemes, then what happens is it may be too late for me then to go back and get the 100,000 deduction plus the expenses at 15-20% they're charging me. I now have taken that reduction expenses and income back, but I can get a refund on that 100,000, the tax impact to it. So I think we have to worry about statutes of limitation on the income tax versus the payroll. But I think the biggest takeaway here is I wish the IRS would send out what I call a soft notice to say to all these promoters, behind the scene, IRS has said, we got the criminal division, IRS working on it. You know, where's the shopping cart there? How do they, the criminal division, the IRS find the promoters? Just listen to the advertisements. Just go online, listen to the radios, etc. The other one is, again, and the big thing I want you to take away is out of this list, they know who we are as small business. And I'm going to go back and reiterate. You get the credit through your payroll 941 quarterly report. It's amended. And right here, just for example, line 18A, part 3 says non-refundable portion of the employee retention credit. And then here's for the qualified sick, COBRA. But my point is the IRS has your federal ID number. They have my federal ID number. If I amend this and I amend it for the ERC, it's right there. So they don't have to go searching for you and I. They go searching for the promoter. But all they have to do is say, hey, this promoter, your federal ID number was in their system. We determined that company as a promoter. My concern is how does that impact me then as a small business? So it's not, you know, some people say, well, do it and get caught and ask forgiveness later. No, in this case, you don't want to get caught.
Because on your 941X, you're signing this. And so can you expound a little more on who's liable? Because I know a lot of people say, well, this company, they're experts, they did it, they know best, and they don't understand what the impact is on them when it's not correct.
Okay, yeah, and I think that's kind of a two-part question. I want to do it this way. So what we see here, we see right here that I, as an employer, am going to sign. It says under perjury, penalties of perjury, I declare that the original 941 or Form 1041, 941, the point of it is it's true, correct, and complete. So I'm the one signing it. Now, they have a place here for paid prepared use. Thank God that's on there now. So you start to say something?
Well, it was just when you said I'm the one signing it, you're saying the business owner.
The business owner
is the one signing it, not the CPA. Not you as a CPA, but you as a business owner.
Correct. I am saying I'm aware and complete. And like that one that I qualified for last week, if I signed their engagement letter, I was the one that determined that I qualified. So if these promoters, if I'm determined I qualify, and all they're doing is Excel spreadsheet and putting all my payroll in, and here's the other thing. Again, think about it. If they're not asking when the government shutdown started and stopped, stop.
Just walk away.
So, again, I hope this has been a good list, because remember, this form here is what they can audit for 5 years if it deals with ERC. And think about penalties and interest, and if it becomes part of a scheme, IRS is not nice on penalties. So I hope this helps. Please look at some of the other videos. I'm doing one for tax professionals. I'm going to refer them, and I'm doing this for the employers, because I want to communicate a checklist for both sides. And it's not an exact checklist. Some of it's just smart business. So take the comments that Laura and I have said in this presentation, write out your own list. And again, whether you've already got the ERC credit, the money, or you're getting ready to apply for it, this applies to you, because if you raise question and these issues didn't happen, first call whoever did it. Give them the opportunity. And then secondly, get a second opinion from your tax advisor that does your current income tax work. Hope this helps. See you in the next video. I'm gonna take her with me.